Elon Musk managed to get a $45 billion pay package without paying a dime in taxes. Now let me put this in perspective for you. With $45 billion, you can spend $1 million every single day, and it would take you over 123 years to spend it all. And I'm gonna tell you one thing about this pay package that the media doesn't, and that's how he did it. Because would you wanna know what that is? Well, of course you would. If you don't know me, my name is Shannon Robnett, and I've spent the last 25 years using tax codes to help me build a bigger, better investment machine. And now it's my goal to share this knowledge and guidance with other investors to help them double their balance sheets even faster than I did. What they didn't teach you in school is this: changing the way you're paid can save you millions, literally millions in taxes. So let's take a look at how Elon Musk planned his payout package to show you exactly what I mean. You don't have to be a Silicon Valley CEO to pay the way you strategize your income so that you can reduce your taxes, and I'm gonna tell you why. So let's talk about how you can structure a compensation package and what it typically looks like. You know, most employees come in and they ask, do you have a 401k? Do you have health insurance? You know, what's my time off? Things like that. But the biggest thing you can do is try and get into a different way you're getting paid. The way that one would do that would be to say, hey, I need to get $150,000 a year for my compensation. You guys are offering $300,000. I want to be able to utilize a stock purchase offering. I want to be able to get a vehicle paid for. I want to be able to do certain things where you can define that. And a lot of people say, well, I do that because I get paid bonuses. Let me tell you this, we're getting ready to buy a business. We're looking at what the employees get. They get bonused very, very well. The last bonus that the owner paid out was $50,000. The employee walked home with 27 grand after taxes. Now we might get some of that back when he gets his taxes done, but that's insane to lose almost half of it just to taxes. So what you're gonna wanna do is figure out a way, like Elon did, to be able to take advantage of that. And this is how he did it. In 2018, Elon came to the board and said, I want to get paid based on how well the company does. And I want to tie 100% of my compensation to how well the company does. Now, to a board, this sounds excellent, right? Because I can sit there and I can ensure that you're going to get the result you need for yourself and the shareholders. And for that, I can get paid a lot more than you would want to pay someone that said, hey, listen, I need to get $100,000 a month for my living expenses, and then after that, I can put the rest at risk. Elon went all in. So he came in and he said, if the share price gets to this point and holds it for 6 months, this is my compensation. I'm going to get paid this many shares of stock. Now, that price is going to be $70 a share. This last compensation package, he had to get the share price to $650 a share, and it had to hold that for 6 months. So what does he do? He accomplishes that. How? We all know the guy's grind, it's legendary. When he did that, it opened up 930 million shares to him for compensation. Now, I know what you're thinking. That's $45 billion in today's prices. Have fun paying those taxes, Elon. But the way that he structured it is he actually has to pay for those shares at a reduced price. Now, if we go back to the 2018 number, that was at $70 a share. The stock did a 3-to-1 split, and then it did a 5-to-1 split. So in that time frame, one could argue that Elon is paying $5 a share. $5. He's paying $5 a share for 930 million shares. When he does that, he can go to JP Morgan, he can go to Morgan Stanley, he can go to any large banking outfit, and he can say, I'm going to use my $45 billion value in my 930 million shares as collateral for a loan. And I want a loan that, let's just say it's 20% loan to value. He can legally get $9 billion, of which he pays $1.9 billion for the shares that he bought. He pays $1.9 billion. He still has $38 billion in value sitting over on the sidelines, and he's got $7 billion to spend, all tax-free. Why? Because he was given an asset that he paid for, but he was given a lower price to buy it at. Once he buys it, he uses that just like you would do at the car dealership. You go down there, you say, I'd like to buy this truck. The bank says, here's the money. You give the money to the car dealership. They give you the truck. Same thing. JP Morgan advances the money to Tesla. Tesla says, here you go. Here's your shares. He now has paper value of $38 billion. My apologies. Excuse me. That B is hard to say. $38 billion. He now has $7 billion in cash in his bank that is untaxed, and he's paid for his shares. That is how you do it as a Silicon Valley CEO. This is a compensation package that was designed from the very beginning never to be taxed. Now, his last payout from the company was back in 2022. So if he's got markers in there that he's achieving every 2 to 3 years, that means he's going to have to make some cuts in his life because he only has $7 billion to get him from here to the next pay raise. But as you guys can see, this is a very simple thing to do it. And I'm going to tell you, Expedia allows this. Google does this with their employees. Amazon does this with their employees. You're able to buy shares at a price. You're able to opt in for those things. There's shares that are gifted to you in those organizations, but there's also shares that you can take advantage of. So this is what I'm saying. You can do this in your daily life. You can create this value in your life. Instead of taking all of your money in the compensation part of the package, utilize some of that for a down the road where you're getting shares of the company, which will continue to be volatile, quite possibly. They'll appreciate, but they're doing that outside of your tax bracket. The only time that you're going to have to deal with the tax man on this issue is when you actually liquidate those stocks. So, as we can all see, this is a genius way to do this. And if you want to know one even better than this, you need to look into what Peter Thiel did with his PayPal shares, because that was amazing. That is how changing the way you get paid can drastically reduce your taxes. So I know you're asking, is this really legal? But if it weren't, do you think Elon Musk would be getting away with it after it's been plastered all over the news media? The IRS would be all over him. And I know it probably feels like he's playing with fire, and it definitely is. But if you don't understand the why and the how behind the laws that make this possible, you're at a disadvantage. Now, let me address a couple of common misconceptions about tax avoidance and evasion and this word loophole. Listen, a lot of people say that it's a tax loophole. It's not. It's designed to incentivize, because here's what's going to happen. You're going to take those funds that you didn't pay the IRS with, and you're going to use them to do other things. Elon Musk is buying jet airplanes. He's starting other companies. He's employing people in a new startup. He's getting involved in other businesses. He is utilizing those funds to create more jobs. Another example is what Jeff Bezos just did when he moved down to Florida to avoid Washington state tax on the sale of his assets. We got another video about that. You'll have to check it out later. But there are specific tax codes that address this. So what Elon did essentially was created a conversion of ordinary income. That's what most people get when they go to work. They get a paycheck, they get ordinary income. In the course of doing business, this is what they create. He changed that to a capital gains tax so that when he sells an asset, he will get paid on it because he did buy it. And even though he bought it at a reduced price, that was part of an agreement that he had that gave him the legal right to do that. Because we're not related entities, he and Tesla are not related entities, he can create a legal document that agrees to just about anything. He agreed to pay a certain price for the stock, and they said, if you do these things, we will allow that to happen. They're third party, they're not connected. It's not you and your brother doing this or you and your mom. This is a different thing. And so when you look at it that way, you can see where this was all structured. This is all in the tax code. So first things first, Elon took it from a 37% taxable event because of ordinary income at his tax bracket on the federal level would be 37%. He took it down to a capital gains tax, which is between 18 and 20%. It's a long-term thing. Now, if he were to buy those shares of Tesla and turn around the next day and sell them, he would have a tax event. But because he's going to hold them for a year, he's now converted that to capital gains. It's what happens if you bought Disney stock 3 years ago and now you're going to sell it for a profit. So he has now reduced his tax bill by half. There are several other things that Elon will likely do between here and the actual sale that will probably reduce that tax bill further, maybe even to zero. So this is how this works, and this is all laid out in the tax code on how to do this. The problem is most people are programmed to look at the tax code as a penal code, and it is not. It is a code that is designed to help you understand that if you do certain things, you will receive certain benefits. If you don't do those things, you will receive penalties. Just make sure you're doing the certain things that let you receive the benefit. So Elon's already done this. He put together his compensation plan. He got this bonus the first time when the company hit 50 billion. He got it again when they hit 100, did it again in 22. And if you'll remember, in 23, he became the largest taxpayer in US history when he sold some shares. But the thing is, he'd already cut his tax bill in half because he sold shares that he had had for more than a year, making it capital gains, not ordinary income. This is a playbook he continues to run. This is not new. And he has not been audited for it because the IRS knows exactly what he's doing and he's playing by their rule book. Now that you understand the why and the how of these tax laws, I'm going to show you how to put this theory into practice in your life. So assuming you're not in the same tax bracket as Elon Musk, however, a lot of you will be because 37 is the top amount that you can pay, how does any of this really apply to you? And what can you take from this video and immediately take action on in your own life? If you work for a company that offers stock options, you need to be taking advantage of that, especially if they are a set price regardless of where they are at. Here's the thing, if you can defer part of your compensation into a stock plan, this is going to be very beneficial for you because you are going to do the exact same thing as Elon is. If you are taking valuable shares of a company you already own and you are selling them, a great thing to do is buy another company. That's what Elon did when he bought Twitter, because there's tax advantages involved in buying other companies. And so while he did create a tax consequence for himself in selling shares of Tesla, those went in to buy Twitter, which created tax benefits. So did he really pay taxes? Nobody knows. So here are the things that you can do. Just look at your compensation. Look at how much of that can you divert to a 401k? How much can you put into a HSA, health savings account? How many other places can you have it go instead of having it come into your direct pocket? Because that is the highest tax bracket. Below, I've linked my free book, Wealth Secrets of the Elite, a tax strategy guide for the intelligent investors that includes the exact tax codes and strategies that Elon Musk used and many others use so that you are able to take the ones that relate to you and start strategizing your cash flow like an intelligent investor.